Hello, everyone, and welcome to another eToro Hangout. Nimi Howard here. Today, very exciting day again. Lesson 3, trading made easy with Mandeep Athwal. Mandeep, how are you doing today?
I'm fine, thank you. How are you?
I'm doing well. I'm doing well. Thank you so much for
Good.
joining us. I'm also joined by my lovely colleague, Yana. How are you doing today?
I'm fine. It's so nice to be with you guys again. How are you? How are both of you?
Fine, thank you, Anna.
Good, good. Nimi?
I'm doing well. I can't complain. So, guys, let me just start. Before we get started, I just want to start by saying today, a very, very important lesson, crucial lesson, in my opinion, what separates successful traders from the ones who are not successful, the psychological aspect of trading, the mental side of it. So today we're going to be covering that, and I believe this is a very, very important and crucial part of what separates the successful traders from the non-successful traders. So without further ado, Mandeep, please begin.
Okay, thank you, Nimi. Let me start sharing my screen.
And
Okay, guys, can you see my screen?
yes.
Yes.
Okay, perfect. Let me just enlarge this. Okay, today, trading made easy with myself, Mandeep Atwal or Mani Atwal. Here's our disclaimer once again. Please read through it to obviously know that this is educational video and we are not here to give you any kind of trading advice or to tell you where and when to take a trade. Okay, let's get into it. Last week we discussed the history of Forex charts, and if you remember, we learned how to read charts, basic knowledge about why and how the charts move, and then finally we touched on supply and demand. Today is lesson 3, is trading psychology. So today we will discuss trading and our mental game, the power of money, negative emotions, trade plan, trading journal, keeping your account alive. Let's go through one by one. First, for trading and our mental game. In this, we will discuss what kind of mental state is required to be a successful trader. The power of money is just our general discussion where we will discuss what money and how does money affect your trading. Then we will discuss negative emotions, how they affect your trading, and then I will very excitingly share my trade plan with you guys and also help you and give you tips how to write one for yourself. I will also show you a copy of my trading journal that I use every day, and also we will finally touch on how to keep your account alive and not bankrupt it. Okay, let's start with trading itself. So, is trading difficult? Well, it's difficult if you make it difficult. Reason being, it's because it's like any other business, but it does not change. Because other businesses change with fashion. So, for example, when I say fashion, new things come out in this world. People come out with new products. People come out with new fashions, and almost every business has to adapt to the new kind of style or lifestyle this world lives in. However, in trading, we only have one style, and that is we buy and we sell. That is the only way we make money. There is no other ways about it. So why do so many people fail at trading? Well, it sounds pretty simple that trading is just buying and selling. So why is it that people can't do it? It's not like we have to actually go like other businesses where we need to always research on new products and try and stay with the fashion trends, etc. Well, one of the reasons people fail at trading is because they don't seem to understand the psychological game behind trading. Now, I will go into this bit more, but Nimi, can I just bring you in for a moment, just to ask you, what are your thoughts on psychology in general when it comes to trading?
As I mentioned in the beginning of this hangout, I think it's absolutely a crucial part. I believe, as a trader, investor myself, that if you are not mentally prepared, then you are most likely going to fail. I believe that the psychology behind this, the mental aspect of it, plays a huge role. And if you're not mentally prepared, well, then I believe the market is going to eat you alive.
Okay, how about Iona? How about yourself? What are your thoughts on psychology in trading?
I always tell my clients the biggest mistake is to be afraid of the market or to be afraid to make a decision.
Hmm.
Why should we find this market difficult? Just because we have to listen the rumors or we have to do technical analysis? We can always mix together both of them and make a
Hmm.
decision. The moment you're afraid, don't come in. Don't come in if you're afraid. Yeah.
Exactly, yeah. So fear. Iona is just talking about fear. We will touch on fear as well. Okay, so finally, I put a point here. I say, who shall we blame? Well, as anything in life, whenever things go wrong, we look to blame others. But in trading, it's only one person you can blame when it starts going wrong, and that's yourself.
Uh,
Okay, so trading, is it hard or easy? Well, it depends how you approach it. Well, trading can be very simple, but it's not easy. However, this is always dependent on your trading process. Sorry, guys, can I just stop you there because I'm hearing a lot of background noise?
Um, are you able to hear us clearly, Yana?
yes, everything's fine. Everything's okay from my side.
Okay.
Are you still hearing it, Mandy?
Yeah, I can hear people talking in the background, so we're gonna have to stop this.
Okay, bear with me one moment, guys. I apologize for this.
Take your time. Hey, Manny.
All right.
So you think that when a client, for example, I also want to understand the psychological thing, because it's a very important thing. Some of the clients are afraid, some are not, and
בהצלחה, סליחה, רגע הצלחה
Guys, I'm sorry about that.
I'm gonna take something from this drawer. Got it.
I apologize, guys, for the inconvenience there.
no, it's fine.
Good luck.
Okay, guys, sorry about that. I want to apologize to everyone for the disruption here. I apologize once again. Let's go ahead and continue on with where we were, Mandy.
Okay, let me just go back to sharing my screen.
Yeah.
Okay, can you see my screen?
Yes.
Okay, so we were talking about whether trading is hard or easy. Well, trading is simple, but it's not easy. Reason being is because we make it hard for ourselves. People don't understand the concept that trading is just about buying and selling an instrument. You don't have to do anything else. You just need to know when to buy and when to sell. People tend to think that there is another game behind it, but there isn't. You can obviously add a lot more to it as you go along, but as things stand, and I'm going to show you an example of this as a trade I took this morning, how easy it is just to look at a chart and just pick up a trade and just walk away from it. So let's talk about why we make trading hard. Well, simply one of the things about trading, and you have to accept this fact, is that trading is arguably the single most challenging venture on this planet. Now, you might not want to be you might not be willing to accept that fact, but it is true, because one of the most crucial parts of trading is that your money is constantly on the line. And whenever someone's money is on the line in any business, they are worried, they take decisions that they shouldn't be taking, and hence why any business where your money is at risk will become challenging. And in trading, we put our money at risk every time we enter a trade. Now, having said that, it doesn't always have to be like that, and we can actually make it a bit better and a lot more easier for ourselves. And that is what we're going to discuss today: how to make these challenges easier for yourself. One of the things that I want to say is that the reason I say trading is arguably the single most challenging business venture on the planet is because it's where, with every tick of the market, whilst you are in a trade, you are either gaining or losing money. Now, that takes me to my next step about money and its powers. Since we were kids, we were taught that in order to have what we need and what we want, we must have money. Now, these days, it's true to the fact that in order for us to do anything in life, and especially where money is involved, we do need money to help us to complete and accomplish our targets, goals, etc. But one of the problems is that money has become so principal on this planet that our parents, families, schools, media, government, all these people who we live with and whose society we share every day are chasing money, and they're telling us to chase money as well. And the problem with this is that we now don't we don't actually measure success with integrity, honesty, also living a fulfilled life of service, etc. What we do is we measure everyone's success with money. So depending on how much money and assets they have, we say whether that person's successful or not. And I know it sounds very boring at the moment, but the reason I'm going over this is because I want you to understand the power of money and how it controls your mind. Because when you trade, if you're constantly looking at your account balance and thinking, oh, it's going up, oh, it's going down, oh, I'm making that much, oh, I'm losing that much, you kind of take away the focus away from your trading. So what we want to do is ignore money. What we want to do is focus on trading, because if we focus on trading, we will automatically start making money. So in order to be successful at trading and make money, you need to focus on trading rather than focusing on money. I mean, Nimi, you've probably seen this with your clients, people who often come into the market and they risk all of their account in order to just try to make the money, and not knowing that they should be trading rather than trying to concentrate or fully concentrate on money. What are your opinions on this?
Well, Mandip, yes, I see this quite often, that clients, traders are chasing the money, and that's all they're thinking about. Now, of course, this is what you're here for, is to make money, but
Yeah.
that is not what should be the only thing on your mind. And unfortunately, I see it too much where traders have poor money management. They are investing with a large percentage of their account with their capital, and they're highly exposed to the market while chasing that money, only thinking about, as you mentioned, I'm up, I'm down, I'm up, I'm down. So once again, the
Yeah.
psychological aspect of it's coming in, and I see it very often that people blow their accounts because they're trying to make a quick buck.
Yeah, and thank you, Nimi. And one of the things that we want to share with you is that I was talking to Nimi about this earlier, is that so many traders are really successful at start simply because all they're concentrating is on money, but they forget, they get drawn into the money aspect so much that they actually forget the trading plan, and then they go and hit the wall. And I'm sure, Nimi, you was telling me this yesterday, that you've seen traders who've earned 100%, 200%, and then they just go and crash.
Yes, they come in, they do great, and they think, wow, this is simple, this is easy, I could make a fortune at this, and before you know it, everything is gone. So as Mandeep said, the mental aspect of it is crucial.
Yeah, exactly. Okay, so what happens is that when you talk about money, money usually leads to two things. Either exceptional happiness. So when you're making money, you are exceptionally happy. And when you're losing money, you are very sad. Now, both of these will lead to this, negative emotions. Now, you might think, if you're making money, why would it lead to negative emotions? Well, simply because once you made your money, you're now happy. You've risen to a level where you shouldn't be if you was following your trade plan rather than following money. So say, for example, you've made $2,000 in one day and you don't know how you made it. You are very, very happy. Next day, you might make another 2,000, so you're 4,000 up. But the day after that, you come crashing down. Now, because you got yourself to a point where you think, okay, this is easy. Like Nimi said, people come in and think, oh, I made a lot of money. I can carry on making money. But the problem is with trading, and we see it day in, day out, if you don't know what you're doing, if you don't have a plan, you are planning to fail and you will crash. There is no doubt about it. Unless you close your account and just get out of it, that is the only way you're going to make money. But the best thing to do is have a plan. In order to have a plan, first of all, we need to realize, why do we need a plan? Well, just as I just said, is that making money and losing money leads to two things: negative emotions. Making money in the sense that you don't know what you've done. What we want to do is take out emotions altogether from our game. Now, negative emotions are usually fear, anxiety, anger, doubt, and greed. I'm going to come back to Iona on this. Iona, you just said to me a couple of minutes back that your clients say to you they fear to come into the market. Do you want to just touch on that? What kind of thought process goes through these people's head? What do they actually say to you?
Hi, thanks for this. Usually, what they are talking about, the fact that they do have $20,000 available to invest. However, they don't know how to do it, or they just heard from a friend that this business is very intimidating. That's when people like me and Nimi, we come in the business and we explain to them it's not like that. Like you said, they must follow a plan, a strategy. Can be long-term, short-term, intraday, scalping, whatever. If they invest $20,000, there are way much higher chances for them to make money than investing $500. So
Okay.
I would like us to talk about the plan. I would like them to hear what you think, what strategy they should use. Fear and the greed are their worst enemies.
Okay, yeah. Okay,
Hey,
yeah.
Mandeep, if I may just step in, while we're talking about fear, I have a perfect example. I spoke to one of my clients yesterday, and we were talking about the yen and what's been going on in the market, the yen weakening, and he was interested in going into a yen position, a dollar yen position. And so we were chatting about it, and one of the things that he mentioned towards the end, after we did some analysis on it, he said one key word. He said, I'm not sure. I'm a little concerned. As soon as he said that, the first thing I told him, you know what, if you have any doubts, please I mean, think about it twice before you enter into a trade. And sure enough, he was actually going to enter into a trade on the opposite end. We lost some funds on it. Some, as Yana said, as you said, fear does play a big game in this, role in this. So just wanted to share that with you, that we do come across this on a regular basis. It's not just something we talk about that doesn't happen.
Yeah, I mean, we're talking about fear, and it's quite interesting that you've just made a point about, a client who's got money looking to invest, and same as Yona, people come to her with money and saying that they are fearful about this.
Intimidated,
One of the things you got to understand is that whenever we have money in our hands and we want to invest it, we will always fear about loss. However, if we see a plan where how our money is going to be invested and how it's going to generate income for us, it starts to take the fear away. I mean, like, let's take an example. Say, for example, if I had £20,000 in my hand and I came to Yona and I said to Yona, if we put, this money together in a trading account and just trade it, would you be fearful? Without, if I didn't tell you how we're going to trade it, what we're going to do, would you be fearful that we might lose that money?
If I would be afraid.
Yes, would you be afraid if you don't know what I was going to do and how I was going to do it?
I don't think so, because we are two people in this. We're going to talk about it. We're going to develop a strategy. You will make me understand some things.
Yeah, okay, I'm going to stop you there.
Yeah.
You just said we're going to develop a strategy. Now,
yes.
what I was trying to ask you was that if there was no strategy, if there was nothing, if I just came to you with £20,000 and I said to you, Ilona, I'm going to invest this, I don't have a strategy, I don't have a plan, would you be fearful?
I believe so, yes.
Yeah, okay. So there you go. I finally got my answer out, to be honest. Okay. Yeah, so what the point I'm trying to make here is that if you don't know what you're doing, if you don't have a plan, you will always fear, no matter whether it's trading or any other business. Without a plan, you are planning to fail. Okay, so that's enough said about fear. We will touch on fear, how to eradicate it from our trade plan a bit later on. For now, let's concentrate on anxiety and anger. What happens is that when you don't have a trade plan and you lose money, you kind of feel lost. So you feel anxious as to, you don't know what's coming around the corner when you're trading, because if you had a plan, you will know exactly what is around the corner and what you should be doing. But when things starts going wrong, you feel lost and you feel angry, and it's often people feel they should overtrade, trying to make the money back that they lost, and sometimes they get angry with the markets just because they had a loss in the market. One of the things that you have to understand is that the market is always right, and you only lose money when you are wrong, not the market. So you can't blame anyone else but yourself in this business.
Oh, okay.
One of the things about anger is that when you lose money, it starts affecting all of your lifestyle. You start being upset with others, you start being upset with yourself, you start doing the things that you shouldn't be doing. And it also starts putting a doubt in your head. When I say doubt, it's when you say, for example, you've been trading for a while, but you had 10 losers in a row. What you start thinking is, am I not good enough for this?
Yeah.
Am I doing something wrong here? Yeah, by all means doubt yourself, but don't doubt yourself to a level where you can't trade anymore and you start fearing the markets. Now, on the other side of it is greed. When you made a lot of money in one trade and you don't know what you've done, you start getting greedy, and this is the most crucial part why people always crash in trading, and this is the reason why so many people lose once they made a big profit. It's because they get greedy. They think it's easy, and they can, if you made 100% in your account, they think that rather than 100, they can now turn into 400, and next thing it goes to zero. So what we're going to do, we're going to talk about all this in our trade plan and how to get rid of them, because these are negative emotions, and we definitely want them out of our trading.
Okay.
Okay. So negative emotions, first of all, let's discuss why do we want to take them out. Well, these do and will make you vulnerable. What I mean by that is that when you lose money in the market, or when you start losing money in the market, you become vulnerable to the market. You start putting trades in that you shouldn't be, you start doing things that you shouldn't be. And also, emotions will always pressurize you to do things that are not in your best interest. For example, moving stop losses, taking larger trades than your account can hold, and also things like doing no analysis, just jumping into trades without any thought process. And the biggest thing about negative emotions is that negative emotions will carry on making you lose money over and over again. So it's very, very crucial that we get rid of negative emotions from our trading. Otherwise, you will carry on losing money, and it won't stop until the day you actually get rid of the negative emotions. Okay, guys, do you want to just come in for a second, share your thoughts on negative emotions and trading? Because obviously, I think I've been going on for a while now.
Yeah, Yanni, you want to give your opinion about this subject?
I'll share shortly what I believe. If a client is afraid to make some trades and he's in a rush, he will do the wrong things, the wrong trades.
Great. And I'll say something very short and brief to the point. And Mandeep, I don't know if you'll agree with me. I believe that people don't even realize and recognize that this is what they're going through. They don't even understand the concept of the whole negativity. They don't even know that it exists. And therefore, when you don't know that there's a problem there, how do you fix the problem? So I think that's the biggest thing I think people are missing.
I mean, if we look at it, if I just go back a slide, I mean, say, for example, we have a client, a trader who is losing money in the market. He's going to have fear. He's going to have fear every time he enters the new trade, thinking, am I going to lose money again? He's going to be anxious every time that trade starts going against him. He's going to be angry when he loses in that trade. He's going to doubt himself. And if he does win, he's going to get greedy because he doesn't have a plan. I'm sure, Nimi, you will agree. All these factors play in as soon as you enter a trade.
Absolutely. Each and every time, all these factors come into play. Unfortunately, I believe that most traders don't recognize this, and this is why they come across this problem of losing money.
Yeah, exactly, and hence why 95% of people never make it in trading, because what they forget is that they are trading their emotions. Now, if your emotions are negative, your trading will be negative. If your emotions are positive, your trading will be positive. What we want to do is be neutral, where we don't have any emotions in the game. If we do, we only want the positive one. We want to get rid of these negative emotions. So let's move on. So how do we make it easy? Well, it's pretty simple. For disciplined traders, trading can be easy. Among other things, trading is about skill building. It's like anything in life. If you want to become a doctor, you have to go to university, you have to do the courses, and then you have to practice, and then you can move up. Now, trading should be taken same as any other profession, and one of the reasons that people fail at trading because they don't treat trading as trading. Instead, they're treating it as a casino where they think they can just bet on the market, make money, and walk away from it. You might get lucky once, twice, but eventually, if you want to make a career out of this, then you do have to trade it as a proper profession, and you have to treat it like a proper business. I'm going to share my business plan in a second with you guys to show you exactly how I started out and where I am today and where I'm looking to go. And obviously that will help you to write one up for yourself as well. Our main focus should be on growth and development of your abilities and talents. Now, what I mean by that is that when we talked about money earlier, our focus at this stage shouldn't be on money, how much money we can make. Obviously, the reason we are here is because we want to make money. It's interesting because in anything we do in life, any other profession, if someone wants to be a lawyer, if someone wants to be a doctor, if someone wants to be an accountant, or anything, they only have a slight thought about how much money they are going to earn. However, they always concentrate on how they're going to get there, what course they're going to take, where they're going to take that course, how many years it's going to take them, how they're going to do their work, etc., etc. Then I'll sit there every day thinking, how much money am I going to make? How much money am I going to make? So why do people do this in trading? I never understand. If you want to learn trading, get rid of the thought that I'm going to make a lot of money. Instead, think like something like, how am I going to make money? How am I going to learn? Sorry, Nimi, carry on.
No, sorry to interrupt. I wanted just to touch before we move on. You mentioned something right now that I noticed a lot. You mentioned something about when you say if you go into profession, what courses you're going to take. You're thinking ahead. I want to get your opinion about this because I see this a lot, that people come in to the markets very excited, not knowing anything about it, not having a plan, not knowing what they're doing, anything. And in the midst of trading, while they're already losing money, then they start studying courses. Then they start looking, well, let me learn about this, let me learn about that. What are your thoughts? Do you think that before you enter the market, you should actually already have that trading plan? You should already have taken courses. You should already done your reviews. What are your thoughts about that?
Yeah, it's simple. People ask that question quite often, and the answer is always the same. You can't learn something without doing it. So in order for you to learn, you need to be trading. I can sit here all day telling you, your psychology should be like this, and you should be doing this, you should be doing that. Until you put your money on the line, that is the only day you are going to recognize your mistakes. That is the day you're going to think, okay, how do I improve this? Now, when we talk about growth and development, this is exactly what I'm trying to say here. Is that when you say people are already in the markets, what they want to be doing is that maybe if they, open a bigger position at the moment, maybe they want to say to themselves, okay, if I've got 10,000 in my account, I'm only going to trade with 2,000 for now, until I see my plan working, until I see profit, and then I will move on. I am going to show you guys my trade plan. So in that, I have got something that relates to what you just asked me. So it will be interesting for our clients to see that.
Great.
Does that kind of answer the question as to what
Yes.
you asked?
Yes, it does. Thank you, Mandy.
Yeah? Yes. Okay. Okay, so in order to have anything in life, we need some sort of plan. So if you want to be a professional trader, we need to have a plan as to how we are going to get there and what we need to do. Now, let's have a look what trading is all about as a business and what you should be looking to do. Now, here is my business plan. Let me just see. Can you guys see my business plan or not?
Not yet. We're still the slide of let's make it easy.
Okay, just bear with me 1 second.
I've also wanted to mention something. Me and Nimi, this is for all the clients that would like to join it or they are actually existing clients. Me and Nimi, we are I personally offer basic training to my new clients, and Nimi takes over some of my new clients and goes very deep into technical and fundamental. This is good for clients, Nimi, to know that they are getting some support from our side, from you. Okay?
Yes, thank you. Yes.
No problem.
Okay, Mandy, so it looks like we got your plan up here.
Okay, yeah. So guys, this is my simple business plan. It's not complicated. I keep it simple. My company is called Arrowheart Trading. You can call yours whatever you want to. What your business plan should include is an outline of your business, your non-financial targets, your financial targets, and also monthly profit and loss accounts. And if I just go into the business plan, now when you're writing one out, this is the kind of things you want to be doing. It doesn't have to be exactly as this, because obviously this is my business plan, but I'm here to give you tips as to how to write one. So in your business plan, what you want to have is overall goals and motivations. So in mine, I think this was written in 2011, so it's been 2 years now. In my business plan, I wrote that I need to have a trade plan, I need to have a trading journal, and then it had in there how much equity I want to have my account by end of the year. And then obviously this is important for people who are looking to get into trading as full-time, because they might be working in another job at the moment. When I wrote this plan, I was just moving into trading as a full-time trader. So for me, it was to trade full-time 11 months a year, record every day, and trading and holidays taken, and treat it like a professional job. It's very, very important, this part here, is that you don't take trading as just a side income when you are trading full-time. What I mean by that is that if you have another job and trading is your side income, that's understandable. But if you are a full-time trader and you want to be a full-time trader, then you need to treat it like a professional job. You need to come to your job every day and do your job properly. Also in your business plan, you want to have everything that might improve your trading skills. For example, I have watched the video on Broker's platform and be familiar with it. So you want to know exactly how to trade your Broker's platform. Now next week, we are doing this one for you because eToro clients will have a lesson on how to use eToro platform, and that will take place next week. But for now, I mean, this gives you an idea. If you guys want to take a screenshot or anything, it kind of gives you an idea of what a business plan should look like. This is a very, very simple business plan, and to me, it did the job, and I did hit my targets with it. So, guys, keep it simple, keep it clean, and you can be fine. Okay, let's move back.
Mandy, while you're doing that, I just want to make a quick comment that you mentioned right now something about taking a screenshot so they have somewhat of a guideline. But I do want to make a note that please don't think that because this is Mandeep's trading plan that you can just come in and completely just it works for you. So don't think that if it works for him, it will work for you. It's a possibility that I will, but you know, every trader is different. So I mean, would you agree with me, Mandy?
Oh yeah, definitely. I mean, that's why I just said at the start of it that this is my business plan, and you know, I'm here to give you tips and ideas how to write one, but you need to write one that suits your life, because the thing about it is that my lifestyle is going to be totally different from yours, and yours is going to be different from another person's. So you need to write a trade plan and a business plan that suits your lifestyle. Now, when we go into the extra trade plan, you will see why I'm saying that. But yeah, Nimi, I totally agree with you. This is not to be copied. You should write your own plan. But by all means, take tips from it as to what should be going into a business plan.
Great.
Okay, so now we're going to move on to the trade plan. What a good trade plan should include is routines. So routines for your day, for your week, month, even a year. The weekly and the yearly are usually, the monthly and the yearly are usually in your business plan, because those should be telling you what to do as a whole business. Your plan should also include strategies and setups. So in other words, it tell you how and when to enter the market. You should also have procedures as to what method you will be using to enter the market. And finally, it should include a set of rules, and also a very, very important is to include entry management and exit when you are in the trade. Now, I can talk about this on this simple page, but I'm sure no one's going to understand it like this. So what we are going to do is share my trade plan, and I will just do that in a second. Here we go. Okay. You might laugh at this when you look at this daily routine. Had breakfast. Now you see these little boxes. I do actually tick them off every day. I've been trading for 4 years, and then never still don't miss a day where I actually trade without ticking the boxes. Now, one of the reasons for this is because if I did have a losing day, I know I can't blame myself that day because I did exactly what I was told to do. So the only thing that could be wrong is down here, either this or the market just didn't work out and it wasn't a good day for me. So what you want to do in your daily routine, you want to have everything that you will do when you wake up in the morning. Now, obviously, I'm a full-time trader, so to me, it's applicable in the sense that I can do these. But for you, the routine should be as to whatever and whenever you are going to trade. So if you are coming back from work and you're going to trade, then you need to write down exactly what you will be doing. Majority of these should be applicable to yourselves anyway. I mean, let's get rid of that one. Had breakfast, obviously.
Yeah, Mandy, I'm surprised you missed a crucial crucial thing here on your daily routine. You didn't write what you had for breakfast.
It's the same every day, salmon and eggs. Okay, so what I do is I check my computer every day. I log into the broker platform. I obviously say to check myself whether I'm in good health. If I am not feeling too good, I don't trade that day. As simple as that. I have the broker's numbers and account numbers to hand. So, for example, if I was in a trade and I lost connection with the internet, I can just pick up the phone and close the trades out or manage my trades. Now, it's very, very important because if you are in a trade and say your computer crashes or you lose connection with the internet, last thing you want to be doing is looking for numbers and the market moves against you. You want to have these ready before you actually do anything else. I open up Forex Factory page. You can open anything you want where we look for the daily news. I check for dates and holidays, etc., to see what kind of volatility is going to be in the market. This is very, very crucial. I work at 3% on my account daily. Now I do this day in, day out because my account balance changes every day. So what I do every day, I just punch in the numbers into the calculator and work out what is 3% of my account today, and that is all I'll be willing to risk. Then I have my set of rules. I read my weaknesses every day, so I'm aware of where I normally go wrong. I read and trade the plan and do nothing but trade the plan. My maximum risk for today would be 3%, and I read this rule every day. And I say to myself, whether I'm a swing trader or an intraday trader, this plan is for swing trading. So I say to myself, today you are a swing trader, not an intraday trader. Very important because you want to know what kind of trades you are going to be taking today. I then move on to my strategy and setup because everything is now ready. My computer's ready. I'm ready. I've read my rules. I know my weaknesses. I'm ready to get into the market. My strategy here is very simple. I check the news. I'll get my charts up. I'll mark off support and resistance. I trade in the direction of the trend. I then enter, obviously, trade using my strategy. I look for trades more than 3 to 1. If they're less than 3 to 1, I tend to ignore them. However, these days, obviously, I have developed a new strategy where I do trade trades 1 to 1 and 2 to 1. I also write exactly how far my stop loss is going to be. Very important, because the last thing you want to be doing is entering the market and then putting a stop loss and thinking, okay, where is my loss going to go? You want to be having done all this pre-market before you actually enter, because you don't want to be panicking if the market is going against you. I then have my set of profit targets. This is between 10 to 50 pips. This is when I'm trading, say for example, I'm trading for 15 minutes or half an hour and I get a trade which is moved 10 pips in my favor. I will move my entry to, I will move my stop loss to entry, and then I will carry on taking profits as the trade carries on. Now, this is when you come to the screen. All this is pre-planning, guys. This is telling yourself how you are going to take that trade. This is now when you are in the market. This is when it's all happening. So you're sitting in front of your screen. Now, obviously, this is, like I keep saying, this is applicable to someone who is trading in front of the screen. So if you are not front of the screen, you need to write a plan that suits you, how you are going to execute your trade. If you're at work, are you going to leave an order in the system? Are you going to phone your broker? Or what are you going to do? Are you going to have a text message come to you, email come to you telling you the price is now in your zone? I know it sounds pathetic, but I do actually read this every day. Execution, don't panic. Let the price come in and show you strength and weakness. The reason for this is I want to be relaxed when I'm entering trades. I don't want to be panicking in any way. I want to know exactly what I'm doing, and I want to be sure I'm doing the right thing. So what I do, I relax, I put my prices in the order box, and then I trigger them.
Mandeep, if I may just step in for one moment, just going up a bit there, up top where it says sets profits, we're talking just above the alert takes places, where you say set profit target between 10 to 50 pips before the next supply. You said something there crucial that I don't know if the people that are watching caught. You said that you adjust your stop loss in regards to the stop. You adjust your stop loss. Actually, you move it towards your way, meaning you're moving it up. So something that was very crucial, because what we see a lot of the time is we see a lot of our traders move their stop loss in the opposite direction, kind of saying, hey, to the market, hey, come and get me, and where you're actually moving it in your favor. Is that correct? Exactly.
Yes, that's correct, Nimi, 100%. You don't want to be moving your stop loss against you, because what's the point of having a stop loss? The stop loss is there to stop you out if you are wrong. Now, if you keep moving the stop loss, all you're doing is just getting rid of the stop loss, because you agreed to yourself, to the market, to the trade plan, that I will get out here if I am wrong. If you move that stop loss, you've just kind of dishonored yourself by moving the stop loss and saying, okay, I was wrong, but you know what, I'm going to carry on in this. Nimi, do you agree with that? That's what people do, don't they?
Yes, we see this way too many times, happen way too often. They get into a position, they set a stop loss, and then when the market starts moving against them, they adjust and continue adjusting, believing that eventually the market is going to turn around. And you know, we saw this actually last year, where the euro moved up 1,000 pips and hurt a lot of traders, not just at eToro but overall, because they did not expect that 1,000 pip movement. But I agree with Mandeep. What's the reason for stop loss if you're not going to use it?
Exactly, exactly. And the thing about trading, guys, you have to understand, especially if you are selling a market and you keep moving your stop loss up against you, there is no end to the market. The market could blow you out within a day or two. So whatever you do, work out your risk properly and put your stop loss in. Now, the way I move my stop loss is, whenever the market moves to my first target, I will move the stop loss to entry. Whenever the market moves to my second target, I will move stop loss to my first target, and so on. And that way I will carry on. And sometimes, you know, you could be 7 to 1 in profit, and if you don't move your stop loss to even entry, you come back and you've been taken out with a loss. Why would you want to give all the money back to the market when you was making it? So move your stop loss in your favor, use it to your advantage, but don't use it to your advantage where like Nimi said, where you're moving it back and you're just losing money. The stop loss is there to stop you out if you're wrong and to tell you that you're wrong. So let it do its job properly.
Great, thanks, Mandy, for covering that. I just caught that, and I don't know if the people that are watching really understood what exactly you were saying there. So thank you for
no problem.
that.
Okay, and then we were on execution. So yeah, I know execution is pretty simple. You click a couple of buttons and you're done. Now, for me, I wrote this when I was starting out in trading, so I needed to know exactly what will happen once the price moves into my zone where I'm looking to take the trade.
Manny, can I ask a question?
Yeah, sure.
What do you mean by do not panic, let the price come in, show strength or weakness?
What I mean by that is that when you are trading, say for example, you marked off support or resistance. Say you had the price coming to your support line and you are looking to buy.
Yes.
The last thing you want to be doing is panicking and thinking, when do I enter? When do I enter? Now, in that sense, what I will do is I would say to myself, okay, the price is now hitting my support line. Now, don't panic. Let the price come into my zone that I marked off. Let it show strength and let's trigger.
Okay.
So, in other words, it's a step-by-step process. So, you're not panicking in the market. You're doing what your plan is telling you to do.
Okay.
And I know it sounds a bit harsh at the moment that you have to read through this bit by bit and you might miss your trade, etc. But guys, believe me, when you do this day in, day out, this will manufacture into your head, and you will be every day doing this step by step. Okay. And you won't be going wrong. So just take it step by step for now, but eventually it will become part of your trading. And then management. I think Nimi, you and me discussed this yesterday, didn't we?
Yes, we did.
Yeah, that so many people move into profit and yet they don't know how to manage their trade, and then they come out with a loss. Guys, if the market is giving you money, take it. Don't give it back. Use the stop loss. I keep going on about the stop loss. Use the stop loss. Stop loss has got a lot of power. When you are making money, if you want to get out of the market and you think the market is going to go against you, don't let the market come back and take you out. Get out when you think you should be out. Move your stop loss in your own favor. Keep moving it until you're taken out so that you can make the profit and then get out with a profit. Post-trade, very important, but very often overlooked. People take a trade, they lose money. People take a trade, they make money. End of story. They come back next day, start again. No, what you want to be doing, whether you made money, whether you lost money, take a screenshot, print it off, put it into a journal, write it down, write your emotions, write your results, whether it was a winning trade, losing trade, and how you felt in the trade, so that next time you come, you don't make the same mistake. But more importantly, if you made money, next time you come, you repeat the same thing again. You don't want to be forgetting how to make money, and you don't want to be repeating how to lose money. So it's very important. This is my weekly routine. What I do is I go over every trade I've taken. So the market is usually closed on Saturdays, and market is always closed on Saturdays. So I always sit down for a couple of hours, go through the trades I've taken for the week. I record my profit and loss for the week. I view my chart on Sunday evening for the rest of the week, and then I update trade plan if I need to. Hopefully my trade plan is helping you guys to give you an idea as to how to write one out for yourself. Nimi, I'm sure you will agree it's very, very crucial that everyone has a trade plan.
I do agree, Mandy. I think a trading plan is crucial, as I mentioned, to being a successful trader. If you don't know what you're doing, if you don't know where you're going, if you don't have any goals, anything to shoot for, any standards for your trading, you're probably not going to be successful in this industry. So a trading plan should be your new best friend when it comes to trading, should you want to be a successful trader, in my opinion.
Exactly. Okay, I'm just going to run through the pointers quickly. We already obviously discussed these. I'm just going to tell you the importance of these. Well, routines are important because they neutralize your behavior. Like I just said, that you want to be doing the same thing over and over again so that you know you're not wrong. It's the markets that are not working in your favor today, and tomorrow they will work in your favor, or eventually they will work in your favor. So don't change your routines. Stick to the good routines and carry on doing what you're doing. So
Mandy, I'm sorry, just a quick question. So what you're saying here is, although the market conditions do change on a consistent basis, your routine and your strategy should stay consistent and the same.
No. Routines are different from strategies. Do you remember my trade plan had routines and then it had strategies and setups?
Okay, the reason I asked is because I just want to make sure if there was any confusion between the two. So if anybody's watching, please understand that there is a difference between the two. Thanks, Andy.
No problem. Routines was things like we talked about, having getting ready, switching on computers, etc. So those things won't be affected by the markets. So you want to be doing those things daily. You want to be having your brokers numbers ready, etc. So those are your routines. Strategies and setups, as Nimi just mentioned, these are the ones that you might want to change. As I made a point just a couple of minutes back, my last point was when I sit down on a Saturday morning, I look back at the markets, and if the markets are showing me something different, then I want to change my strategies to suit the markets. Now, strategies, I just want to quickly run through this. A lot of people have a lot of strategies. What you want to be doing, having 2 or 3 strategies maximum to start off with, because you don't want to be having 10, 20 strategies where you don't record any results and you don't know which one's working, which one's not working. So have just few strategies, have a look at them, let them work for you, try them out. Normally I try them for 3 months to see what kind of results they're producing and whether they're worth continuing with or not, and try them with a small amount. If they start working for you, great, they start increasing your position size. One of the things about strategies and setups is that you should always take into account your trading style and when to use them. So if you are a full-time trader, your trading style will be different from someone who is a part-time trader. So very important when you write your strategy, whether you are going to be an intraday trader or a swing trader, and that is the kind of strategy you want to be looking for. And then finally, do test your strategy and use it. There's no point having a strategy if you're not going to use it. Test it, back test it if you don't want to risk any money, and then start using it with a small amount. And then if it works for you, then start increasing your position size.
Mandy, what would you say to those who want to test their strategy, but say, you know what, I don't want to test it on my real account because I don't want to subject my real funds to loss. So I want to trade on my demo account. What would you say on testing your trading strategy? Because obviously it's not quite the same when you're trading with virtual money and your real hard-earned money.
Yeah,
What's your opinion about that?
My opinion about virtual money is that the emotions don't play the same game, because you don't feel that it's not real money. If I lost it, it's no big deal. Whereas when you put your real money on the line, things start changing and you start thinking, okay, you start doing things that you shouldn't be doing, or you start thinking about the markets differently. So rather than risking it in virtual money, you can do it in 2 ways. You can either paper trade it. What I mean by paper trading, you can back test it and look back, say for example 3 months, say to yourself, if I use this strategy for the previous 3 months, what would have been my results? Or better, what I do is I have a strategy and I take a position of the smallest amount my broker offers. So whatever it is, 10 cents, $1, I will start taking trades on those and then start increasing my position size.
Okay, great. Thank you so much for that.
Okay. And then we come to procedures. This is obviously all this is in our trade plan. This is when we are talking about market execution, how we will enter, and also how we will manage our trades. Obviously, I've run through it on my trade plan already, so I won't go through it again. My rules, you want to have a set of rules for the markets every day, and you want to stick to your rules. If you start breaking even one rule, then throw them out the window, because it's not worth having a set of rules which you are going to break. Your rules should be your Bible. You should read it every day, and in that you should have what you shouldn't be doing, what is the maximum amount of risk you will take and you won't go over that, your rules on entry and exit, your rules on stop loss. We talked about this, me and Nimi we had a discussion about this stop loss just a couple of minutes back. So very important. It is just to even put a line in your rules to say, I will not move my stop loss against me. I will only move it in my favor. Rule that will work in your favor all the time. Then you will need to have a rule if entry is missed. I speak to a lot of traders who start chasing the market and then they end up losing money. You want to have a rule to say if entry is missed, you will wait for the next setup and not chase the market. And then finally, guys, keep it simple. You will get there. Now, before I finish off, I just want to quickly show you a trade that I took this morning, because it's very important that I share this so you know what I'm talking.
Manny, and you will share with us the screen with the trade that you done in the morning, yes?
Yes, that's great. Now this is a trade that, sorry, not this morning. This is a previous one. I must have put the wrong screen on here. Well, just to give you an example. Okay, I took a trade here. You can see this was a clear level of resistance or supply. So what happened was the market was trending up, and on a 15-minute chart I seen this level. Now there was a level on this side over here. The market came in, I entered the market, I set my profit target opposite zone. I don't mind how you enter the market. What I wanted to show you was that if you enter the market, you want to know where you're exiting. My exit was already set up here. What I did was, when I entered the market here, I moved my stop loss. Once it hit my target, first target here, I moved my stop loss to entry. And then it moved to my second exit, which the market started going against me. But I left my stop loss at entry. In other words, I had no risk in the market at all. And then finally, market came back and took me out on my third target, for which I didn't make any money. But for the first two targets, I took off 75% of my position. The reason I'm showing you this is that it's not just simple of entering and just letting it go whichever way it's going to go and just having no stop loss. You need to know exactly how to follow your trading strategy and then do it day in, day out, and do it properly.
Yeah, you know, man, if I did want to make a comment on this, for those who are watching, did you notice one thing about Mandeep's? If you would be able just to put the chart back up again now, Mandeep,
yeah,
if you don't mind, just want to. For those watching, if you take a look, if there's something that you're seeing, or I should say not seeing, you notice that Mandeep does not overload his charts with indicators. We see this way too many times when traders come in, load their charts, and we actually spoke about this in the previous lesson 2, that they come in and load up their charts with 5, 6, 7 indicators. And Mandy made a fantastic point about this last session, that, well, you're using 5, 6, 7. Which one do you know? How do you know which one to go by? Which one is the correct one? I mean, would you agree with me, Mandy?
Oh yeah, definitely. I mean, I'm not a fan of indicators. I mean, when you're starting out, you're going to have 1 or 2 indicators in your favor. For example, you can see here, I have a simple moving average just to tell me which way the market's moving, right, so that I'm aware. The reason for this is because I am taking a counter trend move here. So I want to be getting out quick as possible, taking my profit and get out. if this was a long position, so for example, if I had entered here, I want to be staying in it because this is showing me that the market is moving in my favor. So yeah, use indicators only to extent to help you, but don't use them to take trades, because eventually indicators will kind of, they're not fail, but they are lagging. So what you want to learn is how price moves rather than how indicators move.
Great. Thanks for that, Mandy.
Yeah, no problem. Okay. Right, let me just see if there is anything else I can share with you guys. There is one more thing, and it's quite interesting thing actually. Okay, someone asked me on Open Book whether they can turn 100,000 into a million and how long it will take. Now, if that person is still watching, I want to show you this. If you had 100,000 in your account, that was your starting balance, and you was earning 25% per month. I said to this person that you need to know how much you're earning per month on your account and whether you are consistent with it. And if you are, how long it will take you to get to a million. Just for matter of interest for that person, if you have got 100,000 in your account and you are earning 25% per month, I can tell you by 2014 or December this year, you will be a millionaire.
Wow, that's impressive. I think I'd like to.
Sorry, Nimi, lost you for a second.
Yeah, we lost you for a second. I was there. You are,
Nimi?
Nimi.
I think we lost volume. Okay, well, we'll carry on. We'll carry on. Okay, so having said that, let me just see if there is anything else.
Are you guys able to hear me now?
Yeah,
Now
we can
we're
hear you
fine.
now. You're back.
Okay,
Yeah.
great, fantastic.
Manny, so by 2014, more than $1 million in this client's account.
Yeah. We'll turn you into a millionaire. There is one more thing I want to share. Just bear with me 1 second whilst I just do that.
Nimi, by 2014, more than $1 million.
I tell you, he's gonna be yeah, he's gonna be loving life.
That's not
Okay, guys.
exactly.
Okay, just quickly, I want to show you this because we talked about risk. So I want to show you how risk is actually worked out. Now, you will note what it says on the top: ignoring this will end all dreams. What I mean by that is if you ignore risk, you will get taken out of the markets, you will eventually blow your account up, and then you will end up with nothing. So all the dreams that you had about big flashy cars, big houses, etc., leaving your job will be out of the window simply if you just ignore how to manage your risk. And I'm sure Nimi will share the same thoughts on this.
Absolutely. You cannot be ignorant to this. You cannot ignore this. This is once again, and I hate to sound repetitive about this, but it's crucial and it makes the difference from being a successful and profitable trader or falling under that category of the 95% that just do not make it in this forex market. So please, as Mandeep said, please do not ignore this. Please do not ignore.
Okay, so what I do, I typically take 2% risk. Now, this is for anyone who is starting out with, say, $1,500 account. If you are taking 5% risk, which I always say, please don't ever risk more than 5% of your account on any one trade. There are trades every minute of the day. Don't risk all your money on one trade, whether it's a good trade, bad trade. Whatever you do, stick to your 5% risk. Or I would prefer if you stuck to 2% as I do, because that way it will take you a lot longer to blow your account up rather than, you know, with someone who's doing 100% risk at once, and if that trader goes against them and the account is gone. how risk is worked out is simple. Basically, you have your account balance. Say, for example, we'll take a figure which is, say, 10,000. We have 10,000 in our account. We divide this by 100, and we obviously times it by 2 gives us 2%, $200 to risk. Now, what you do, you need to divide that $200 by amount of stop loss pips. Again, stop loss comes into play again. So what you would do is have 200 divided by, say, if your stop loss is going to be 40 pips, 200 divided by 40 will give you exactly how much you should be risking per pip. Guys, does that make sense?
Yes, yes.
Yeah, I have put a post up on my wall on OpenBook for anyone looking to know how to work out their risk. It's on there, the formula is on there, so you can easily work it out. Now, look at this. It says, remember, any pair is not to exceed 3%. So divide the risk. Very, very important. Some people, what they do, they work out the risk correctly. They'll work out, say, for example, 5%, 10%, whatever they work into. But they'll do trade 7 pairs with euro in it, and then what they'll do is risk the 10% on each one. You're no longer risking 10%. You're now risking 70% on the euro.
So I'm sorry, Manny. So what you're saying is money management is also, it's crucial. It's a crucial factor in being a successful trader.
Of course, yeah. I mean, without money management, you don't really know where you're going, and you don't know how many. For example, if you're risking 2% today, tomorrow you're risking 20%, day after you're risking 10%. Say the day you risk 2%, you had a winning trade, but the day you risk 10%, you had a losing trade. Overall, you're going to be down. But if you risk the same amount every time, if your success rate is over your loss rate, then eventually you will come out as a winner. But if you keep adjusting your risk, then it's not going to work out. So you need to have a fixed amount. You need to think to yourself, how much should I risk? Now, the reason I say 2% is because, especially for newbies, I want you to learn how to trade first before you start thinking about how much money you can make. Obviously, I've shown you that, if you had 100,000 in your account and you're earning 25% per month, which is not that hard to earn. 25% is not hard to earn in your account. You can turn into $1 million. If you've got a strategy that's producing you 25%, if you had 100,000, you can turn into $1 million. It's no problem at all. Or if you had 10 grand, you can turn into 100 grand. So it is possible. But for now, take your time, take it easy, take it step by step.
So what would you say to those people, traders, whether you're a beginner, whether you've been in this market for a bit of time? What would you say to those people that, for example, have $10,000 in their account and you see that they have $8,000 in open positions? What would you tell these people? Second part to this question.
I would say to them, cut it down. If you've got 10,000 in your account, you should be risking about 2,000 to 3,000 maximum. I don't understand why people risk all their account on one. Tomorrow, if you lost all your money today, what will you be doing tomorrow? Do you want this forever, or do you just want it for today? That's what you need to decide.
Okay, great. So, Mandy, we're coming here towards the end, I believe. Is there any other slides that you would like to share with us before we wrap it up?
Okay, yeah. Just want to share one slide. Okay, this is my eToro page, so anyone who's got a question on anything that we talked about today, or about lesson 1 and lesson 2, please post it on my feed and I will give you answers. I have had a few questions which I've answered, but I would like to hear more of your opinions of what we are talking about here, what we're trying to achieve here. And above all, I want you guys to learn from what we're teaching you. So if you do have any questions, please post it on here or on Mimi's wall or on Iona's wall, and we will get back to you. Just to finally wrap up, next week's lesson will be lesson 4, and next week we will be going through the eToro platform and also how to copy master traders and general discussion about the markets if we've got time. But mainly our focus will be on how to use the eToro platform and also copy trading. And I think that's me done.
Great, great. So first of all, thank you so much, Mandeep, once again for your time, for with all your knowledge and experience, sharing everything with us. All those that are watching, I hope you learned something today. And if you took one thing out of this, I hope it was that please do not allow your emotions to get involved. Please do not allow your emotions to control your trading, because nothing good can come out of it. As Mandeep said, please go to his wall, talk to him, write to him, comments. You saw that. I'm sorry, go ahead.
Yeah, sorry, I just want to come in and say that if you are looking to write a trade plan and you are looking to write a trading journal, then please do come to me on my wall, ask me questions. If you don't know how to start, if you are missing something and you don't know where to start from or how to write one, I will advise you, I will help you. But if you don't come to me, I won't know exactly where you're going wrong or what you're looking for. So it's very important that if you feel you are stuck in writing your trade plan, because your trade plan is your Bible to trading, so you need to have a trade plan. So in order to write one, if you are struggling, please come to me and I will help you out.
Great. Please, guys, you just heard it from Mandeep himself. Please go to his wall. I highly suggest and recommend that you start following him so you can be involved with his daily market updates and reviews. Please come talk to him. He would be more than happy to share his knowledge and experience, as well as if you want to post it either on my wall or on Yana's wall. We'd be more than happy to help you guys whichever way we can. So with that being said, thank you again once again, Mandeep, for your time.
No problem, my pleasure.
It was a fantastic lesson. I myself learned a lot as well, and so as I mentioned, I hope you out there did as well. So Mandeep, Yana, pleasure as always. I look forward to next week. Next week, same time, same place. So everyone, have a wonderful weekend, and we'll see you next week.
Okay, guys, take care. Bye-bye.
Bye-bye.
Bye. Bye.